Hey everybody, welcome to Tuesday's episode of Straight Talk. It's great to be here with you today, and I thank you for joining me on a very rainy Tuesday. But we have a lot to talk about, and specifically we're going to talk a little bit about the CPI inflation data for December, which was just released a few days ago and was really sort of a little bit more surprising to some than others. We had a year-over-year inflation number of around 6.3%. In December versus a year-over-year increase in prices of 6.8% in November. So there was definitely a decline in inflation. And when you take out things that are very volatile like food and energy, then if you strip those away from that core CPI inflation number, then the year-over-year price appreciation for December was 5.3% versus 5.4% November year over year. Now, if we take that down and we break it down into a monthly CPI number that we can easily understand, basically inflation dropped by 0.6% in December on a monthly basis versus only having dropped 0.1% in November of 2022. This is the largest single monthly decrease in CPI inflation numbers since April of 2020. So this is a good trend. This is some good news. Now, couple that with the fact that the bond markets have also been dropping as of late, and we've seen some very good reductions in fixed mortgage rate pricing. This is all a good indication that we may actually be coming over the hump. Now, does this mean that we won't have a rate increase come January the 25th when the Bank of Canada is expected to meet next? Not so fast, because I think we still will. Unfortunately, we're likely going to have a 0.25% increase, but as you remember, when we capped off 2022, the Bank of Canada said any further rate decisions in terms of an increase are going to be data and market specific. So we're only going to make a decision of doing further quantitative tightening if the data supports it. Now, with the data that we've received now, where we're seeing inflation is actually trending down, and it's actually trending down a little bit quicker than expected, this actually gives the Bank of Canada enough data to likely make a very key decision of pausing interest rate hikes after this last 0.25% rate hike that I expect to be coming in January. Talking about how things are going to look going forward with inflation, Stephen Pullis was recently interviewed by the Financial Post, and he actually made some good points. He thought that given the current situation in the labor market, given where everything is going with the overall strength of Canada's economy, and given where we're seeing the numbers trending with inflation when they come out with these CPI numbers, and the reduction of costs such as gasoline, which has come down and been reflective in these numbers for the lower CPI numbers that we're seeing in energy costs, he does expect inflation to actually come down a lot faster than most people assume it will, and a lot quicker, happening mostly in 2023, where he believes the bulk of inflation will settle by the end of 2023, and that by 2024 we should actually see inflation numbers at some point in that year go back to the 2 to 3% target range. Now, we'll obviously have to see if that's going to materialize, because any major global conflict or any major global event such as another pandemic or variant or further escalation of the war in Ukraine could obviously topple any of these expectations or delay these expectations. But his points were that these are largely cyclical events, and that we're actually overall in a very strong position in Canada. So that's something to keep in mind and something to be a little bit optimistic about, as we're constantly surrounded by bad news. Another thing we want to really talk about is keeping our economy going strong moving forward past this inflationary period that we're in. One of the biggest things that we're going to have to really focus on, and we are focusing on as a government, I believe, is immigration. Immigration is going to be key to Canada's true economic recovery and may actually help reduce that severity of the recession that we're expected to feel in 2023. Most economists agree that most of our growth, domestic GDP, is going to be relatively flat in Canada, and most growth for GDP for this year is going to actually be as a result of immigration. So we're expecting a potential 1% increase in GDP growth only from immigration. Now, immigrants coming here and working here is one thing. Not having enough housing stock and housing supply to live in is another. And so one of the biggest hurdles that we have in our system is the red tape and bureaucracy of having very, very good qualified immigrants choose Canada to come here and live and work and contribute to our economies, but having nowhere to live and having very expensive housing where they can find it, just like you and I and anybody else who lives here. So removing the red tape at the municipal level for rezoning laws, being able to reformulate and reinvest in technology to be able to process applications for permanent residency a lot faster than we're currently doing, and helping people get settled, and most importantly and perhaps most urgently needed is actual on-the-job training. Sometimes we have a medical professional who may come here from another country. They're more than qualified to be able to jump into our system and work right away, but they don't have all the technicalities of the Canadian medical system under their belt, and therefore there's a learning curve. But that learning curve doesn't have to be as steep or as long as we currently make it. And if we invest further in technology and we have on-the-job training, certification programs, and accelerated programs to get these people to work faster, that will actually make a very, very big jump and a very, very big difference in the health of our economy moving forward. And these are all things we want to really be mindful of as we try our best to facilitate our growth and our progress over the next year or two. If we don't manage to have enough housing stock, and if we don't manage to take away enough of this red tape to have our immigration numbers actually be able to grow properly here with sufficient housing for all of us, then we may not hit our growth targets from a GDP perspective for the next 5 years. So this is something that all levels of government need to work together in a nonpartisan way and really focus at the municipal, provincial, and federal level to make housing stock more accessible, to make building more accessible, density more accessible, because let's face it, most of the homes being built are going to be condos and multifamily homes, because single-family homes just are not going to be the future of a growing city. And unfortunately, that's just something that everyone needs to accept and move beyond ever having this notion that a dwelling has to be a single-family home. No major global city accepts that reality, and as the world's population grows and our cities get bigger and bigger and we have more and more affluence and more opportunity in our cities, we're going to attract more and more people who need a place to live. And all of these people are going to be living in majority cases in multifamily homes. So we need to have that ability to remove that red tape and make that a possibility, not just for immigrants, but for everyone who already lives here who wants to get into the housing market. Lower cost multifamily homes with less red tape and less bureaucracy to get them built and get them out into the market for everyone else to be able to actually purchase or rent and buy and live in. So that's just what I really wanted to chat with you guys about, was the inflation numbers and where they're going. The trend seems to be coming down quickly, and this is a really, really good sign, because this was the largest decrease we've had in inflation on a monthly basis since 2020. That's almost 3 years of data now that we can rely on and look back at and feel really good about, knowing that we've got a good trajectory going and that we should be over the biggest hump of these rate increases, and that our overall economy is still quite strong. Our unemployment is historically the lowest it's ever been, and hopefully with net immigration increases, with lower inflation numbers, and with lower interest rates, hopefully sometime in 2024, things will start to feel settled again, and we'll be able to move forward and have the prosperity that every Canadian wants. So if you guys have any questions about this or how it relies back to your specific mortgage, please send me a DM, comment below, or just call me and we'll talk about it and go over your specific needs. Thanks again for watching, guys, and I hope you have an amazing day.